What's up, guys? Welcome back. It's KongBoy. And if you've been on the internet at all over the last 2 years, then there's a very good chance that you've heard of NFTs and how lucrative they were starting in 2021. There has been over $70 billion traded in NFTs over the last 2 years just on the Ethereum blockchain. However, after a year of just insane speculation, the NFT market has slowed considerably. And you can take a look at this Google Trends graph to see the spike and fall over the course of 2 years. Search volume dropped hard, and it's now around what it was in the summer of 2021 after its initial pop. And it seemed to have flatlined now, but just barely holding up above the interest that was last summer. The number of sales of NFTs is down 86%, and the total volume of sales in USD is also down 86%. The number of unique buyers is down 82%, and what seems like the worst statistic is that OpenSea, the largest NFT marketplace, has seen volume drop 99% compared to December of 2021. From that very peak in December, the total sales volume was $5 billion, and now it's just at $60 million. To make matters worse, not only are people losing interest in NFTs rapidly, but the global economy is starting to look very scary in a lot of ways. Whether we're already in a recession or are heading directly into one, it's not surprising that risky investments in assets like crypto and NFTs are the first ones that people get out of when things start to look bad. Inflation and interest rates are at levels not seen in decades, probably since the 70s, and these definitely aren't the conditions where people are going to want to spend their money on monkey JPEGs that really don't have any value. Maybe once things begin to look good again in a couple years, possibly when the money printers turn on. Despite this, there are still a few collections that remain extremely overvalued, especially when comparing it to what they've offered to their holders. The Bored Apes are still at around $100,000, which is just unreal. And this is the rare exception to most NFTs being worthless and down tremendously. So yes, NFTs are dead for now, but there are things that they can change that can position themselves to reach new highs in the future. I believe that with how it gained popularity and especially how it's evolved since then, NFTs have been doomed from the start. And to understand what I mean by that, it's important to remember what things looked like in late 2020 and early 2021. It was post-COVID, or pretty much during the middle of it. Cryptos were at their all-time highs. The money printers were fully on, and stimmy checks were dropping into people's bank accounts, while this new tech wave was gaining serious popularity. Tons of people were jumping in with their extra money that they had just received and started minting and buying NFTs either based on what the team had promised they were going to deliver on in their roadmap, or just based on hype and thinking that they could flip it and sell it for more later on. In hindsight, things were a bit too good to be true, and it was way too easy to make money. Retail investors got a bit too confident, and they were buying pieces of art that either had no value that was offered to the holders, or were just promises that were very unlikely going to be delivered on. During this mania, it really didn't matter. NFTs would go up 2, 5, 10x in value, and it was really just a get-rich-quick scheme, and it was sustained longer than most people thought it would. And a lot of people would also describe it as the greater fool theory, where someone is only buying something to be able to sell it to someone else later on for more, when in reality the value of such an item is much less than what they paid for it, even though they could sell it for more to someone else. But eventually people realized that instead of buying these NFTs that would go up in price instantly and almost always, they could just come up with their own collection and make a hell of a lot more money. Once people began to realize this, we saw lots of pump and dumps, rug pulls, scams, overpromised projects founded by anonymous people, regular people, or celebrities that leveraged their influence to be able to sell out a collection at a overvalued price. Well, really, most of the time it wasn't even just that it was overvalued, it was straight up misleading. And after the fact, we can see countless examples of people with influence that jumped onto the NFT bandwagon and started releasing their own collections. We've seen YouTubers like CoffeeZilla and Twitter accounts like NFT Ethics have it be their job to expose these scams or really low quality projects that made it seem like they were going to do a lot with the space. It's often people that realized they could make a lot of money really quickly from releasing their own collection and either knew from the start that they weren't going to deliver on their promises that got investors to give them money in the first place, or were just naive to the fact that they couldn't execute on these promises either because they didn't have enough money to make that happen, or it was just way too hard and they really overpromised. Towards the peak of the NFT market, you could have picked just about any NFT collection and you would be up on it and be able to sell it for profit at some point in the future. The biggest reason most people bought any NFTs in the first place was to get in on the hype, to use it as a status symbol, and to hopefully sell it to someone else later on for more. And that means that the best utility for an NFT was to be a money printer. Speculation was the name of the game, and it still pretty much is. The only difference being that there's much fewer people playing the game in order for it to work like it used to. And people don't want to associate with NFTs until they're more than just these digital collectible items that can be sold to someone else for more. Not only do NFT creators make money by selling these overpriced JPEGs, but they also can earn revenue by every single trade that happens. For every sale, they can earn 2.5 to 5 or even 10% on marketplaces like OpenSea. And recently there's been a lot of talk with what's left of the NFT community about marketplaces that enable optional royalties. This means that the decision to pay the creator royalty fee is up to the seller. But with so many projects relying on royalties to fund their developments or to put money into their pockets, they're going to have to get creative and come up with new ways to run a sustainable business model beyond just selling their NFTs to begin with. Too many collections rely on milking speculation to rake in royalty fees off of trading volume. Another unfortunate truth about the speculative nature of NFTs is that projects aren't really incentivized to deliver on what they've promised, at least not in a timely manner. Because once you do deliver on what you've promised, then that kind of kills the anticipation. People aren't really going to speculate on what's to come in the near future, and the news is going to be priced in, therefore people aren't going to want to buy. This is another reason why people just find NFTs scammy. They have to remain in a perpetual state of hype in order to keep the attention on them and to stay relevant, even if they haven't done anything meaningful. The reality is that NFTs offer little to no value that the average person actually cares about, at least not right now, which is why sustaining the hype and barely actually delivering on anything is perfect when you get 5 to 10% of all the trades. But just imagine for a second that you had to pay 10% to Nike, for example, to sell a shoe to someone else, even after you had already bought the shoe from them. This would be absolutely absurd in the real world and just proves that NFTs need more time to mature and a different approach to offer real value and not just be a giant internet Ponzi that it currently is. Overall, the problem with NFTs is that for the creators and the buyers, it's, for the most part, a short-sighted effort to make a lot of money very quickly. NFTs, as we know them, are dead, but they still have a chance. Even though NFTs got way too hot way too quickly, and what was happening was not sustainable, this is not quite just another fidget spinner fad. People rightfully hate the term NFT because they immediately think of scams, Ponzi's, celebrities shilling some garbage NFT project that either they made or were paid to promote, and the primary utility for holding NFTs pretty much just being to make money did not help one bit. Sure, you can access a community and sometimes play it in the game, but we're far away, and I'm talking years, from an actually good metaverse game that people enjoy playing with a full in-game ecosystem that is really going to convince people to move over and use NFTs. A lot of people believe that NFTs rebranding to digital collectibles is going to help reestablish some reputation, but really, collectibles are only a sliver of what I believe is the most promising aspect of this technology and what it can be used for. Smart contract-based digital goods are very promising for use cases of this technology that are beyond just making a quick flip. And there's plenty of examples of things that would be good to turn into NFTs, but what a lot of people get very frustrated by is people turning any simple item that doesn't need to be made into an NFT into an NFT, just for the sake of making some money. This is why utility is such an important part of NFTs as a way to give the average person a reason to use this technology beyond just being able to sell it later, hopefully for more. There fortunately are plenty of examples of good NFTs that have a lot more to offer than just making quick money. Some of these NFTs focused on utility include ENS, which are NFT domain names, POAPs, which are badges of recognition and just other collectible items that are soul-bound to your wallet, access passes for an alpha group, some education, or whatever it may be, games, and avatars and items in those games or some virtual world. Verifiable ownership of property, whether it's physical or virtual, is another really solid use of NFTs. And we've seen a bunch of examples of real-life houses be tokenized and then sold and recorded as NFTs. And this is done using soul-bound tokens and multi-signature wallets, which is basically one wallet controlled by multiple for security reasons. And these soul-bound tokens cannot be traded and are bound to the wallet. Unless, of course, there's very specific conditions that are met in the code of the smart contract that backs this tokenized house that allow it to be transferred from the holder. And advances in technology and smart contracts involving soulbound tokens will open up a whole new realm of possibilities with ways to use this technology with NFTs in ways that aren't just speculative. The gold rush for NFTs is over, at least for now, and it's never going to be super easy like it was previously to make money, and you're going to have to get creative with it and at least contribute to the growth and development of this space in order to gain mainstream adoption. NFTs are dead, at least for the time being, but maybe check back in 2 to 3 years. Who knows? That's it for this video. If you guys enjoyed, hit that thumbs up. If you have any questions or comments, leave them down below. See ya.